Hello and welcome. You tune into Market Fatafat, where we take you through all the stocks that are buzzing away in trade, either on the back of news flow or on the back of technicals. But first up, let's take stock of how the markets are shaping up. Well, right now, Nifty is absolutely flat, not doing anything. There's no action in the market. In fact, Nifty Bank, both are absolutely flat right now. If you look at Nifty Bank also, it broke below its key levels and it is trading absolutely flat since then. There has been no recovery on Nifty Bank or Nifty, both of them. If you look at the broader markets, then broader markets also, mid caps are underperforming. They're underperforming with cuts of 0.3%. Nifty small caps, though in the green, is absolutely flat. So absolutely no direction, no action happening in the market whatsoever. Sectorally, if you look at it, Nifty Auto is continuing its a bit of a momentum coming from yesterday. It is trading in the green with gains of 0.7%. M&M continues to surge since yesterday. There have been good bullish brokerage notes coming in on M&M for the last 2 days. So M&M is in focus today. In the last 2 days, it's trading with gains of 2.8%. FMCG also continues its momentum. In fact, yesterday we saw the defensive stake charge of an otherwise really somber market yesterday. FMCG was one of the players, and today also it is holding on to gains of 0.5%. So largely this is how the market is shaping up. Not much of an action coming in today. But let's get on board then Nilesh Jain, who's the head of derivatives and technical research, Centrum Broking, who's joining us on the technicals. And from our research team, we're joined by Ravinder. Hi, good afternoon to both of you. Thank you so much for taking the time out and joining us. Let's get started with all the stocks that are buzzing in trade. Then first up is Zomato, that's in focus today on the back of a bullish brokerage note coming in by Bernstein. It is in fact the top pick. They're maintaining an outperform rating on it and with a target price of 310 rupees, which is an upside of 35% on Zomato. On the back of that, Zomato is a buzz. It has given up those morning gains, but nonetheless trading with gains of 1.6%. They expect Zomato to continue to build on the quick commerce leadership. They also feel that, a Blinkit has led the dark store expansion, guiding a 2x increase in the stores by December 2025. And also the Instamart has announced its plans to expand its QC to 80 plus cities, which is a big positive coming in for Zomato. Rising competitive intensity has led to push out the break-even targets for Blinkit, and that will take place by 12 to 18 months. They also expect Blinkit to remain the leader, driven by early mover advantage and strong execution by Zomato. They also feel that Zomato investors should take some time to adjust to this new normal of QC losses, but they are bullish on Zomato's performance. It remains their top pick, and they have maintained an upside target of a good 35% from here on, which is a target price of 310 rupees on Zomato. Big bullish brokerage note is aiding Zomato in trade today. But let's move on from Zomato to Nilesh. You picked up Colgate-Palmolive. Now, a lot of analysts are picking up Colgate-Palmolive from the FMCG pack, from the large cap names. Tell us on the charts, what do you see for Colgate-Palmolive?
After a sharp correction, across all FMCG space, Colgate-Palmolive, in fact, it seems like have formed a good base formation near about 2450 to 2500 zone. So from current level, looking at the momentum indicators and oscillators where we are getting a buy crossover, so we are expecting a pullback to continue towards 2580, 2620 on the upside. So with a stop loss below 2475, that's the today's low. One can go long in this particular counter. Today we have also witnessed good build up on the long side as well and good rollover data as well. So FMCG space, it looks like it's poised for a good pullback. So Colgate-Palmolive can also be played as a part of a pullback move.
All right, Colgate-Palmolive in focus on the charts today. But coming to you, another name that's doing pretty well for itself, and that's Biocon. It's given up those morning gains, but nonetheless trading with gains of more than 0.5%. Ravinder, tell us what's the news flow here?
Well, Biocon is in focus, where Biocon Biologics, a fully integrated global biosimilar company and a subsidiary of Biocon Limited, announced that Yes Intake is now available to patients in United States and is one of the first Stelara biosimilar market entrants in the country. And Yes Intake is approved for the treatment of Crohn's disease, ulcerative colitis and plaque psoriasis and psoriatic arthritis, increasing patient access to more efficient treatment option for use in the treatment of common chronic, and the stock is up by almost 1%.
Absolutely, that's Biocon on the back of that news flow. But coming to you now on the technicals, Nilesh, you picked up Ashok Leyland for us. Now, Ashok Leyland has given some really stellar returns in the last 1 month itself. It has started moving up. 15% upside is what it has given in the last 1 month. Will this positive momentum continue going forward?
So if you look at within auto space, this has been one of the outperforming counter in the recent time, and we expect this momentum to continue given the kind of a setup that we are witnessing in this particular stock. In spite of weakness in the market earlier, this particular counter has shown some strength today as well. It looks like it is giving a good breakout on the chart. So for a follow-up move towards 232, 235, this particular counter can be played with a stop loss below 223. So Ashok Leyland within auto space looks positive.
In fact, it is definitely one of the outperformers in an otherwise somber market, Ashok Leyland, and more upside left to that. But on that note, it's time for a quick break. Don't go anywhere. After the break, we're getting you some more stocks. Stay tuned. We are taking you through all the stocks that are buzzing away in trade. And well, one such buzzer is Bharti Airtel. In fact, the stock was up 3%, but it has cooled off from those highs. Nonetheless, trading with gains of 2.4% right now. Well, it is in the back of the news flow that Bharti Airtel is set to merge its DTH business, Airtel Digital TV, with Tata Play in a share swap deal. Now, the Airtel will hold a majority stake of 52 to 55%, while Tata Play's shareholding, including Tata Sons and Walt Disney, will keep the 45 to 48% stake. The deal is expected to help Airtel to grow its broadband and entertainment business by bundling the telecom, broadband and DTH services. Now, the news of this merger comes amid the Reliance and Disney Star India Viacom 18 deal, forming a JioStar, which is India's largest media company. If the merger goes through, it will also be India's biggest DTH sector since Dish TV's merger with Viacom D2H in 2016. Now, Airtel Digital TV, housed under Bharti Telemedia, will gain access to Tata Play's 19 million homes and 500,000 broadband customers. The deal values both the operations at rupees 6,000 and 7,000 crores each. Now, Goldman Sachs has also come out with a note on telecom, maintaining a buy call on Bharti Airtel with a target price of 1,080 rupees. On the back of that, Bharti Airtel is buzzing away in trade. Now, moving on then, Bajaj Finance is another name that is on the radar for you, Nilesh, at least. Tell us, what are you seeing on the charts for this particular counter? I mean, Bajaj Finance has given some really good returns, This has also been an outperformer in this market. Tell us from here on, does the upside continue?
Absolutely. So if you see Bajaj Finance, in fact, Bajaj Finserv as well, both Bajaj Twins are showing strength. And in last few trading sessions, in last couple of weeks, I would say this particular counter has been one of the outperformers in the market. Despite of the correction that we saw, this stock has in fact witnessed an outperformance. So overall, technical setup looks like it is on the verge of a breakout from a symmetrical triangle formation. Good build-up on the long side can be seen. Good volume participation with a good breakout today. So these are the confirmation that stock is likely to move towards 8,600 to 8,750 on the upside. So with a stop loss below 8,360, this particular counter can be bought at current levels, can also be added on declines as well. Position target comes somewhere around 10,000, but purely from a short-term point of view, our target comes around 8,650 to 8,800.
All right, so that's the target price for Bajaj Finance. But coming to you, Ravinder, Coal India is not doing very well today in today's trading session. Tell us, there's a note, I believe, by JP Morgan. Tell us, what does the note say, and what is the target price for this?
Well, JP Morgan has come out with a note on Coal India where they have maintained their neutral rating on Coal India, but they have cut the target price to 395 from 430. They say that there are the multiple challenges to companies earning growth, and the international thermal coal price is softening due to oversupply, along with weak power demand in India since August 2024, and has resulted in muted production growth and higher than average inventory level. Additionally, JP Morgan says that the sharp rise in coal dispatch from captive mines has led to a loss in market share, and the stock is down by over 1% in today's trading session.
All right, so that's the word coming in for Coal India. But coming to you, Nilesh, yet another name from the FMCG basket, a large cap name that you've picked out for us, Nestle India. Tell us, what are you seeing on the charts for this one? Now, this counter hasn't really done much, in the last 6 months. Last 1 month has, though, picked up a little bit. But tell us, what do you see on the charts for this one?
Right. So as mentioned earlier, we are little bullish on FMCG basket as a whole. So Nestle India is also showing a strong rebound from the lower levels. We have seen a lot of consolidation. The stock has been one of the underperformer within this basket, but looks like it is likely to give a strong rebound or a strong pullback. You can say towards the levels of 2300 to 2350. So purely from a pullback perspective, it looks attractive at current levels given the kind of risk and reward which is also looking favorable. So with a stop loss below 2190, Nestle India can be added for up the target of 2320 to 2370.
All right, so that's the word coming in for Nestle. Pullback looks attractive right now on the back of that. Nestle is in focus, but another stock that's in focus today is Interglobe Aviation. Now, Goldman Sachs has come out with a note. They're maintaining a buy on this particular counter with the target price of 5,050 rupees per share. It has given up those morning gains. It has, in fact, it is trading at the lowest point of the day right now with cuts of 2.2%. But Goldman Sachs says that the January Feb PLFs are between 90 to 93% versus last year's quarter four of 87%. The QTD domestic traffic is already up 13% on a year-on-year basis. The yield for January February are also up 5% on a year-on-year basis, and the domestic passenger growth is likely to be around 20% on the QTD basis, which augurs well for Interglobe Aviation. Also, the capacity expansion should not be constrained over the medium to long term, and on the back of that, they're maintaining a buy call on Interglobe Aviation, or Indigo if you will. But the stock has given up those morning gains, is currently trading at the day's lowest point with cuts of 2.2% right now. But moving on then, Texmaco Rail is another counter that is in focus today. Ravinder, tell us what is the news flow here?
Well, Texmaco Rail Engineering Limited, India's leading rail solution provider, has signed a MOU with Nivamo, a Polish tech firm specializing in mag-rail technology and linear propulsion system. And this partnership aims to revolutionize rail infrastructure with high-speed rail, AI-powered diagnostic, self-propelled wagons, and driverless freight trains in India and globally. And by combining Texmaco manufacturing expertise with Nivamo advanced technology, the collaboration seeks to enhance rail efficiency, expand capacity, and modernize railway, port, mining, and logistics system. This aligns the India's vision to lead into next generation transportation and support the Make in India initiative.
All right, so that's Texmaco Rail, currently trading very flat, though in the green. But coming to you, Nilesh, another stock that you picked out is the DLF. Now, DLF also has been, even DLF is one of the names that has done quite well for itself. But in the last 6 months, it has been in a corrective phase. Tell us from here on, do you see the stock moving up now?
The markets looks like most are volatile, so we are getting both sides of move. So DLF is on the other hand looking weak, and we have picked up on the short side. So overall, reality pack as a whole, if you look at Nifty Realty Index chart, which is looking slightly on a weaker side. So DLF is also constantly forming a lower top and lower top formation. Looks like it is heading towards 645 to 640 on the lower side. So any pullback that might get sold into. So with a stop loss of 678, DLF is a stop.
All right, with that, we are out of all the stocks for today that are in focus. So Nilesh and Rabinder, thank you so much for taking the time and joining us today. But with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back with more. Well, let's go across and see what happened at the NASSCOM Tech and Leadership Forum. Well, on the sidelines, my colleague Anurag Joshi caught up with Amit Chadda, who's the CEO and MD of L&T Tech. Let's go across and listen in to what he had to say about the company's plans for expansion, the deal pipeline, and more.
If you look at the world today, right, the ER&D space is supposed to grow from the current $1.82 trillion to about $3 trillion in the next few years. Now, our goal is twofold. Number one is we want to grow faster than industry. If you look at various reports in the last few years, we have grown faster than industry. So we want to maintain that. So if I take that trajectory and I look at the ambition that the board has for us and the group has for us, we would actually like to be $3 billion with about 18% EBIT in the medium term, and then build a platform to get to about $5 billion in the longer term. Right. How will this happen? Three things. One, we restructured the company and now we run as three segments: mobility, sustainability, and tech. And we believe that there's enough room for each of these segments, which are approximately about $400 million each, to get to $1 billion each in the medium term. We also believe that there are some tailwinds coming out in the ER&D space that should help us.
Right. You recently closed an $80 million deal, and that tops, deal wins in the last quarter. So what role will LTTS play, in the 80 million digital transformation with the US manufacturer? Could you throw more light?
Sure. So as again, if I was to give you a slightly longer answer, see, we've been looking at the market and we've realized that we can't do things centrally. So we've been running proactive deal campaigns, transformation campaigns with our customers. There are deals that we have bubbled and closed that are less than $50 million, and those are run by the segments. And then there are deals above $50 million that range from, in fact, we have got a more than a $200 million one running as well at this stage. And then there are 100 million deals, and there are 50 million plus deals running at this stage in the pipeline.
And you're confident about the momentum of deal wins in the coming quarters?
We are. So if I may, the pipeline is a lot better than it was a quarter ago, same time last year. We continue to work, and we've got a very mobilized and enthusiastic team. We've created a central deal engine that's actually headquartered in Dallas, Texas. And then we have segment deal engines that each segment runs. So we're fairly comfortable at this stage that we had a marquee quarter last quarter with a number of deal wins, and I do believe that quarter 4 will be similar, and we hope to keep the momentum as we go forward.
Right. Your outlook on FY26 in terms of the client spending?
So outlook, I do believe that in the industrial sector, I do believe that our clients are becoming a little more sure-footed. Oil and gas, CPG, a lot more sure-footed. High-tech, a lot more sure-footed. Medical is conservative but sure-footed. The only clouds that we see is in automotive, and I believe that that's an H1 FY26 play, should clear after that. So I do believe that FY26 should be better than FY25.
Right. Now, your recent acquisition of IntelliSwift in November, how has that enhanced LTTS digital and your AI capabilities? And particularly, how has that boosted your engagement with hyperscalers?
So Intelli, actually, we announced it in November and we closed it, I think, on 2nd or 3rd of January. So quarter 4, we are running as one integrated shop. It comes with about 1,500 bright engineers, all software engineers. It gives us two things. Number one, Intelli already was working for 3 of the hyperscalers that we work with as well. And with the A+B model now, all these 3 hyperscalers will be 25 million plus accounts for the company annualized.
Right.
Second, Intelli does about $50 million of revenue in healthcare, fintech, and retail. And these are 3 areas which are in the service-led engineering world. And if you look at, we were not playing in that space. So it allows us to be able to grow in that space. And I believe that when we get to $3 billion, each of these 3 should be 100 million sub-vertical for us as we move forward. So it gives us, one, increased capabilities or increased penetration in the hyperscalers. Second, 3 new sub-verticals. And third, of course, software capabilities, pure software capabilities that we did not have to that level in the past.
Right. And on SLMs, now how are you investing in AI in SLMs? I mean, what are the kind of investments? What's your capital commitment there?
So we continue to invest between 1.5% to 2% of our revenues in technology every year. In the last 12 months, we actually announced to the market in H1, if you recall, our margins were slightly lower than H1 of the previous year because we had said that we will invest in technology. So we actually built up compute power. We dabbled in new use cases. We brought on board AI for automotive, AI for sustainability, AI for medtech and high tech. and therefore, if you look at quarter 3, our margins operationally had drastically improved.
All right, that was Amit Chadha, CEO and MD of L&T Tech, weighing in on the company's growth roadmap ahead. But with that, it's a wrap on this edition of Market Fatafat. I will take your leave. Thank you so much for tuning in. Don't go anywhere because market action continues on ET Now.